One of the world's largest financial giants just did a full 180 on crypto. After years of dismissing Bitcoin and its friends, they've finally jumped on the bandwagon, and trust me, this changes everything. I'm talking about Vanguard, yes, Vanguard, the $11 trillion asset manager that basically shunned crypto for years. Just this week, they quietly announced they'll now allow trading of Bitcoin, Ethereum, Solana, and even XRP funds on their platform. And honestly, I had to read that twice to believe it. I immediately shared the news in our Discord community. Links in the description if you want to join, by the way, because I knew everyone would be as stunned as I was. Sure enough, it sparked a big conversation about what this could mean for the crypto world. For context, Vanguard is the world's second largest asset manager with over 50 million customers. Up until now, if you were a Vanguard client and you wanted, say, a Bitcoin ETF, you were out of luck. They wouldn't let you touch it. In fact, when other companies launched the first Bitcoin ETFs in 2024, Vanguard's then CEO basically said, "No thanks, crypto doesn't belong in a long-term portfolio." They even removed Bitcoin-related funds from their platform back then. That's how anti-crypto they were. So, what changed? Why the sudden flip? Well, crypto ETFs turned out to be a huge hit. BlackRock, Fidelity, and others jumped in last year and made a killing with their Bitcoin and Ether funds. BlackRock's Bitcoin ETF, called IBIT, was one of the most successful launches in history. At one point, it held around $66 billion in Bitcoin for its investors. It basically proved that yes, there's massive demand for a safe, regulated way to get crypto exposure. Vanguard must have realized they're missing out, big time. And it's not just Bitcoin. For example, a Solana staking ETF launched in late October and had the best opening of any ETF this year. That's a pretty niche crypto doing big numbers. So clearly, people want in. For Vanguard, watching all that must have been like sitting on the sidelines while everyone else scored goals. They probably noticed clients leaving to other brokers like Fidelity just to get some crypto action. I read that even a 5% uptake among Vanguard's customers could mean tens of billions of dollars flowing into these crypto funds. Vanguard wasn't going to keep losing that. And they picked an interesting time to open the gates. Bitcoin has been on a roller coaster lately. It hit about $126,000 in early October and then tumbled down to around $90,000 more recently. Talk about volatility. As of today, it's hovering around $93,000 because people are suddenly optimistic the Fed might cut interest rates next week, and lower rates usually make risky assets like crypto more appealing. So, Vanguard is basically stepping into crypto during a dip. Maybe they see it as a discounted opportunity. Who knows? For me, seeing Vanguard jump in now is almost vindicating. I've spent years watching big institutions slam crypto as too risky or not real investing. And now those same institutions are opening the door for millions of people to invest in Bitcoin and Ethereum through a traditional brokerage account. It's like when a friend who always said your music taste was garbage suddenly adds your favorite song to their playlist. You feel a mix of "I told you so" and "finally welcome aboard." But beyond the personal satisfaction, let's break down what this means if you're new to all this. An ETF, or Exchange Traded Fund, is basically a stock that represents an asset like Bitcoin. You can buy it in your regular stock account, it's regulated, and you don't have to worry about managing a crypto wallet or remembering seed phrases. For a lot of new investors, that's huge. It lowers the barrier to entry. You can get exposure to crypto without jumping into the deep end of actually buying and storing coins yourself. And this is exactly why crypto ETFs were such a game changer when they finally got approved. It took forever. The first proposals were like a decade ago. Fun fact, the Winklevoss twins, the Facebook guys, tried to get a Bitcoin ETF approved back in 2013. Regulators shut them down, and they kept saying no for years. It wasn't until 2024 that the US finally started approving spot crypto ETFs, and then the floodgates opened. Now we've got multiple Bitcoin ETFs, Ethereum ETFs, and as of a few weeks ago, even a spot XRP ETF. It's wild how fast it went from never gonna happen to everyone's doing it. So, with Vanguard now on board, crypto truly is mixing with traditional finance like never before. But, and you knew a but was coming, this doesn't mean it's all rainbows and guaranteed gains. Crypto is still volatile, and even with ETFs, you need to be smart about it. That actually brings me to something really important. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright. Now that we've got that out of the way, let's talk strategy and safety, because news like this always reminds me to cover the basics. First off, exchanges. One lesson I've learned over the years is to never rely on just one exchange or platform for your crypto needs. Sometimes exchanges go down, freeze withdrawals, or get overloaded right when you need them. It's happened before during big price surges or even when bad news hits. So I always keep a plan A, plan B, plan C with exchanges. For example, I'm signed up and KYC verified on multiple exchanges that I trust and have tested out, like Blowfin, Bitget, and a few others. That way, if exchange A is having issues, I can quickly move to exchange B without panicking. It's kind of like having multiple bank accounts or multiple credit cards. You hope you don't need the backup, but it's there just in case. By the way, if you're thinking of opening some new exchange accounts, which is a smart move in my opinion, I've got affiliate links to all the exchanges I personally use on my website, linked in the description. If you use those links to sign up, it helps support the channel because I get a small commission, at no extra cost to you, of course. But more importantly, you get access to platforms I've vetted myself. Just make sure, whichever exchange you use, you understand their fees and security measures. And remember, spread your risk, don't put all your eggs in one basket. Speaking of not putting all your eggs in one basket, let's talk storage. Another cardinal rule in crypto is not your keys, not your coins. What that means is, if you leave your crypto on an exchange, in an exchange wallet, you don't truly control it. The exchange does. If something goes wrong with that exchange, your funds could be at risk. So for any significant amount of crypto that you're planning to hold long term, consider using a hardware wallet. Personally, I use a Ledger hardware wallet to store my Bitcoin, Ethereum, and other coins that I'm hodling for the long run. A hardware wallet is a device that keeps your private keys offline and safe from hackers. It's one of the best ways to protect your investment. One tip: always buy your hardware wallet directly from the manufacturer's website, never from third-party sellers, because there have been cases of tampered devices being sold by unofficial sources. I have an affiliate link to the official Ledger site on my website in the description. In case you're interested, using that link will give me a small kickback and directly supports the channel, again at no extra cost to you. But regardless of the affiliate stuff, just make sure you take security seriously. The last thing you want is to lose your crypto because you skipped basic precautions. Now, aside from the big news and the safety tips, I want to share a little personal project I'm exploring, something that's been buzzing in the crypto community. It's called Unity Nodes. If you follow my channel, you might have heard me mention Unity Nodes before, because I'm pretty excited about the concept. In a nutshell, Unity Nodes is a new initiative by World Mobile and the Minutes Network. Think of it as a way to run mini nodes, like little servers, that help power a network, and in return, you earn crypto rewards. The cool part is that they structure it as software licenses you purchase, kind of like NFTs, but let's not get hung up on that. Basically licenses that grant you access to run nodes. I decided to jump in and purchase a Unity node license myself. Mine actually came with 200 licenses bundled, which means I could theoretically run up to 200 mini nodes if I wanted. Of course, I'm starting much smaller. I'm going to test it out with about 10 phones at first to see how it all works. Yes, you can run these nodes on smartphones, which is also pretty cool. If the test goes well, I'll scale up gradually. So, why bother with Unity nodes? For me, it's another way to earn crypto passively. You set up the nodes, and they pay you for helping provide connectivity or other services to the network. And get this, you can choose to be paid in multiple cryptos. I'm choosing to get my rewards in Bitcoin, Ethereum, ADA, and XRP, basically stacking more of the assets I already like without having to buy them outright. Now, I want to be super clear. Unity nodes aren't the focus of today's video. That would be Vanguard's big news, but it's part of my crypto journey that I'm sharing with you. And of course, this is not me telling you to run out and buy a node license. Always do your own homework. If you're curious about Unity, I'll put a link to their light paper and a rewards calculator in the description so you can read up and see the numbers for yourself. It's a new thing and some of you have heard me talk about it before, so I just wanted to give a quick update that I'm testing it out personally. Ultimately, seeing a giant like Vanguard embrace crypto is a big milestone. It makes me excited for what's coming next, and I'm glad to be on this journey with all of you. We've come a long way from the days when crypto was just this weird internet thing on the fringes. For the new investors watching, I want you to see this story as a reminder. Even the big players are still figuring this out and jumping in relatively late. There's opportunity here, but you have to approach it wisely. Get educated, manage your risks, and diversify your approach. Like we talked about, multiple exchanges, secure storage, maybe even experimental projects like nodes if that's your thing. On that note, if you want to deepen your knowledge, I've got something for you. I run an educational platform called Cheeky School. The website is cheekyschool.com, where I offer courses on trading, portfolio management, risk management, basically all the stuff I had to learn the hard way. If you feel like you need structured learning, check it out. There's a link in the description and you can use the code YT50 off to get a hefty 50% discount on any course as a thank you for being part of this community. And as I mentioned earlier, we have a free Discord community as well. Link in description. It's completely free to join, and it's where we discuss news like this in real time, share tips, and help each other out. It's a really friendly group, so don't be shy, hop in and say hello. Ultimately, seeing Vanguard do a U-turn like this reinforces my belief that crypto is here to stay and integrating into the mainstream. I'm thrilled to see what it means for us as investors. So, thanks for hanging out with me today and hearing my story and thoughts on Vanguard's crypto U-turn. If you found this video insightful, don't forget to hit that subscribe button. It really helps the channel and ensures you won't miss future updates. Stay safe out there, and I'll catch you in the next one.